Saving the most voted stock for last, it is now time for NIO, a strong and promising stock for sure that is in the midst of flexing its technical muscles. Here we are at day 5 of the US Stocks Challenge. It has been an intense week, to put it mildly, that's for certain, for each episode takes a full day each to make. It's been so busy, I even forgot my cat's birthday. Or hold on. Yeah, right, it's been dead for 7 years. But apart from temporary memory loss, it has also been an incredibly rewarding week, so thank you all for your engagement, your brilliant stock suggestions, and most importantly for voting and deciding upon 5 truly interesting winners. Today we will discuss the final one, the one with the most votes, NIO. And to those of you who haven't watched the previous 4 episodes, I strongly recommend you to do so, as they all go quite in depth. And more importantly, they are a great way for you to improve on your own trading, whether you're a novice or an already seasoned trader. And before delving into NIO, please do note that nothing in this episode is financial advice. And if you like this episode and this 1 week challenge, then please like and subscribe and drop a comment below if these themed TA weeks are something you'd wish to see more of in 2021. And yeah, right, before I forget, happy birthday, Snurre. That's my cat. NIO hasn't been around on the markets for too long. This automatically makes it tricky to analyze, yet I have made some relevant and valuable observations, all of which I will share with you today. First of all, since its IPO in September 2018, the stock has roughly gone up by 300%. This of course is good on its own, but given the current hype on the company, it certainly does leave room for more. After the stock launched, the company had a rough ride in which it lost 91% of its valuation in just 1 year. That's minus 17% on average a month for a full year. But after having bottomed out at $1.19, the stock has since skyrocketed by 3,800%. The technicals look incredibly strong. Here's why. First of all, the primary trend is solid. If we look at the weekly log chart, the stock is trading stably above the EMA 20 and 50. This of course would make no difference whatsoever whether we look at the log chart or the regular one. Moreover, this year's significant move is backed up by heavily increasing trading volumes. This on its own is very bullish and confirms that this move is built on stable ground and that these levels are likely no temporary fluke. Secondly, the RSI is not just strong, it is incredibly strong. First of all, any attentive trader was given a clear lower bullish red buy signal at the March bottom at $2.40. And ever since, the RSI has moved within a very strong bullish red channel. What I particularly like is how aggressively the RSI recharges upon any continuation price move, but how it still maintains its position at or above the upper bullish red line. This is incredibly strong, especially in combination with the strong trading volumes. And for more on this, do watch the RSI trilogy. Thirdly, we can draw 2 parallel lines on the weekly log chart, with the top one being the one of prime interest. Upon doing so, we can clearly see that the price has broken above this ascending channel of ours and is now testing it as support from above. This on its own is a clear sign of strength when it happens on a regular chart, but it's important to know that it's remarkably stronger when the price does so on a log scale. There's in fact quite a big difference really, and this here is utterly strong. I truly like what I see. And lastly, the Bollinger Bands. Just like in Amazon, the price has broken out of it, after which it's been moving sideways. I won't go into the technical details of this again, so if you want to learn more about the meaning of this, then please watch the Amazon episode. And also, do make sure you don't apply the Bollinger Bands on the log chart, for they will look like an old woman's bosom. And I'm not gonna add a picture reference to that, so if you're really enthusiastic about it, I am sure you can find it on Google. Target-wise, it is difficult to predict NIO's immediate future, but we'll still give it a good go. Now, upon a continued parabolic index ride, I would not be surprised if it were to run well into the hundreds. And just like in Workhorse, if we were to get a wave 4 correction to retest the weekly EMA 20 or 50, then the first 4 waves would look like this. Wave 1, plus 375%. Wave 2, minus 62%. Wave 3, plus 2,600%. Wave 4, minus 45 to minus 65%. And as we can see, those numbers are quite impressive already, although less so than the wild Elliott waves of the Wild Horse Workhorse. Looking at a possible wave 5 based on the proportions of the aforementioned waves, a 300 to 1000% move would not be ridiculous at all to expect. Such span would, conservatively speaking, land the target somewhere between $80 and $350. This of course is highly speculative from a technical point of view, but I certainly deem it likely given that the US Nasdaq parabolic run continues to the predicted targets or higher. This leaves us with the short-term downside, which from the wave 4 point of view coincides with the just mentioned weekly EMA 20 and EMA 50 at around 20 to 32 respectively. Of course, these values will increase for each week, which automatically means that the longer the price stays within a sideways range, the less the downside risk. From a technical standpoint, the ideal scenario would hence be if the price were to hover around sideways for a few weeks until the EMA 20 on the weekly were to catch up with the current levels, or at least the support level of this continuation formation, as staying above it is key for the Bollinger Band breakout to justify a continued move to the north. That was the longest sentence of the year. And that was all for now. Thank you and goodbye.